A warm welcome to Business Daily here on Trust TV. I am Yusuf Akogu. Here we bring you up to date with the development in the world of business, a whole lot of issues going on in the economy. As usual, we serve you our business top stories. Take a look. Glad to have you back. A lot of issues happening there in the world of business. Quickly, we go to the stock market to see how the market fared yesterday. Of course, we start with the Nigerian market right here in Nigeria. Of course, the market closed positive. As you can see, the all-share index there standing strong. They are way above 55,000 basis points. And of course, the index there recording a marginal gain yesterday, 0.03%. The market cap maintained the same position there, 28.4 trillion. The volume of trade, of course, yesterday, 626.39 million volume of shares, valued at 5.599 billion naira actually exchange hands among investors. Of course, in the deals worth 6,033. Of course, the gainers on the day, you have the like of if we can quickly go to the gainers for the market yesterday, like you have here, of course, the like of Oando gaining 6 naira 10 kobo there to close strong there at 9.91%. And of course, NCL, National Cash Registrar Company of West Africa, also gaining 2 naira 81 kobo to close strong there at 9.77%. And of course, completing our top 3 gainers for this morning, we have a Transcorp there gaining 2 naira 84 kobo there, also to close strong there, 9.65%. And a look at our bottom table, the losers for the day, we have Computer Warehouse Group gaining 1 naira 87 kobo to close downward there, 9.66%. And of course, NEM Insurance also losing 4 naira there, of course, to close down 9.45%. And Royal X also down 50 kobo there, 7.41% in a negative territory. A quick look at the top trade for the day. We have the like of Transcorp dominating the activity chart in terms of the volume of shares that was traded, 191 volume of shares of that company exchange hands among the shareholders and of course investors of that company. And of course, Access Bank Holdings there doing 125 million volume of shares. And of course, FBN, First Bank of Nigeria Holdings, also closing strong there, 79.7 million volume of shares of that companies also were traded among investors. And in terms of sector performance, we have NJS Banking closing in the negative territory, marginally down 0.02%. And of course, the industrial sector remaining there strong there as it were yesterday, 0.02%. And consumer goods sector also marginally closed 0.03%. And if you talk about NJS oil and gas sector, closes flat yesterday. The volume of trade in that company maintained the same position as where the previous trading session. And of course, the insurance sector closing in the negative territory. Huge number there, 1.41%. there, negative territory. And look at the market across Africa. We have the Botswana Stock Exchange closing strong there, 0.02%. 0.01%. Though almost like flat, you may say, but again, it's in green, so it's 0.01%. And of course, GSE is in Ghana. It's our West African neighbor, one of the competitive markets in West African region. Apart from Nigeria, we have Ghana there closing marginally 0.06%. But if you go to Nairobi in Kenya, Nairobi Stock Exchange in Kenya, closing negative there, 0.05%. Of course, the trading has begun this morning, and we keep tab on this market to give you updates as the event unfold. Quickly, we look at the Nigeria inflation numbers that was released yesterday by NBS, National Bureau of Statistics. We saw that the inflation in the month of April climbed to 22.22%. That is a 17-year high. Of course, the last time we had this number was over 17 years ago. If you look at the trajectory from December 2022, it's been on the upward from 21.34%. It moved to 21.82%, 21.91% in February, and 22.04% in the month of March, and now it has climbed to 22.22% in the month of April. Quickly, let's talk to my guest. Mukhtar Mohammed is a financial analyst. He joined me virtually from Lagos. Good morning, Mukhtar.
Good morning, Yusuf. It's a pleasure being on your program once again.
We're glad to have you as usual. Let's go straight away. The inflation numbers has remained on the upward trajectory. What do you think can be done? The CBN has done quite a whole lot in terms of intervention, raising MPR from 11.5% it were to now about 18%. What do you think can be done again to tame this menace?
I used to remember on your other program, I've said that it's not just about hiking the rate that will solve the problem. You need to also look at the physical side, what they are doing. If the monetary policy is doing everything and the physical side is doing nothing, then you won't see the result. I think that's exactly what's happening. That is the physical side, the monetary side seems to be doing all, and the physical side seems to be non-existent. So what can the CBN do? I think they need to address one major challenge that the CBN have refused to address thus far, has to do with the exchange rate volatility. They want to really bring down inflation. They need to think about the exchange rate volatility. How are they going to bring down the exchange, the difference between the parallel and the government market and the CBN market? I think that's what they need to do. If you bring it down, then you see that inflation will naturally come down, because most of the goods that are hiking inflation are goods that are being out of the shore of this country into the country. So definitely most of these importers have to sort for.
Again, in a couple of days from now, we'll have a new government. We are also expecting that the CBN will have their first monetary policy under the new government after then. Do you see them tightening the MPR further?
Well, I don't know which CBN governor will have. And that hopefully we might still have Emefiele there. But if you looked at the election body language or whatever happened during the election, I don't think the incoming president will want to work with him. But then that's by the way, that's for them to sort out. I think hiking rate at this time will not work well, because you don't even know what the new administration is coming to do, what are their economic policies. So definitely, I think we might maintain the rate and then look at what they are coming up to do. But ordinary government is supposed to be a continuous process. We are not supposed to see them waiting for the new administration. But as it is now, they will have no option than to wait than hiking the hiking rate at this time. Because even the hiking rate, as you said, has not helped any matter. Rather, it has kept dragging inflation higher and higher. So people will say that maybe without the rise in aid, maybe would have been doing up to like 30% by now.
I understand that the MPLC meeting will hold next week, 23rd and 24th of this month. That's before the next government. So we will have some decision before the next government coming in. Mr. Mukhtar, before I let you go, let's look at the food inflation. It has remained so strong. If you look at what actually drive this rate up is food inflation, is currently stand at 24.61%. Now, if you look at some of the food that were listed by NBS, you have the like of oil and fat, bread, cereal, fish, potatoes, yam, and tubers. These are the regular food in Nigeria that Nigerians consume. So what do you think can be done, since some of these food are actually food that are actually produced here, to curtail the rises in the rate?
They are produced here, but the machineries that are used to produce them are not produced here. So we should get that clear. So you have to import those machineries into the country, and then you have to solve for FX. So that is another challenge. Why we have those challenges has to do with the insecurity. When you look at potatoes, you're talking about Kaduna State. When you're talking of Kaduna State in terms of potatoes, you're talking about the southern part of Kaduna. They have not been able to go to farm also. When you talk about yam tubers, you're talking about Benue State. You know what has been happening between the herders and the farmers. It has been ongoing. Then when you talk about oil, then you are talking about maybe all the way from Akwa Ibom, red oil or vegetable oil. Then you're talking about most of them are imported into the country. And so when you look at all this fact, what can be done? Number one, you improve security. Even if we have seen that, but yet the farmers are still scared of going to the farm because they are not sure of total protection from the government. That is one, you still see that. Then secondly, I think, like I said, we need to begin to look at how can the income begin to attract inflow into the country, especially in the area of FX. So that will build our reserve, and that will bring down the exchange rate, both in the parallel and the official market. And that will help bring down the cost of this thing. When you look at cereal also, you realize that a lot of these cereal products, when you talk about milk and other things, are not, most Nigerians depend on the foreign mix to be brought in for their children. And some of the local milk, like most of them that are located here in Nigeria, then you need to look at the FX challenge, like I said, the machines and everything. So definitely, I think it has to do two things: improve security, track inflow, in the exchange rate volatility. I tell you, if we are able to do these two things, naturally, the economic term of demand and supply will take its place, and inflation will naturally come down.
Mukhtar Mohammed, I must thank you so much for your time on Business Daily today. Thanks so much for your contribution.
My pleasure, Yusuf. Do have a pleasant day. Thank you.
And we switch gear immediately to the oil and gas sector. Of course, Nigeria is discovering crude oil in other parts of the country, especially in the northern part of the region, in the northern region of Nigeria. Of course, we've seen in Bauchi, and of course Gombe, and of course now the latest one is in Nasarawa State. The GC of NNPC spoke about this in this package put together by Shamu Dabeng.
Since its transition from a government-owned entity to being a limited liability company in July 2022, the NNPC Limited, which is the largest oil company in Africa, has been making strides to ensure that it remains a profitable organization. According to the group CEO, Mele Kyari, NNPC Limited has a book value of $60 billion and projects to reach $80 billion in the near future. However, Nigeria faces a myriad of challenges affecting the certainty and progress of businesses within the nation.
In this country, for you to run a kind of business now, you are subjected to over 13 taxations. You know, every state government brings out laws, regulations that will border on your investment. So we are not a predictable business environment. You have to keep certain things stable and reliable and predictable. Our fiscal environment, yes, the PIA has done great work. 90% of issues resolved, 90% of fiscal environment fixed, but we still have a challenge, because companies don't know when the next set of rules will come. That's why engaging the politicians to understand and appreciate is very, very critical.
Nigeria has a proven gas reserve of about 206.53 trillion cubic feet, worth an estimated $803.4 trillion, making it the most extensive gas reserve in Africa. However, this natural reserve is yet to be fully harnessed, making it imperative for the NNPC Limited to develop strategies towards its effective utilization.
And that's why we're focused on delivering gas into our country, creating the backbone infrastructure, which is very, very critical. So that is kind of intervention that we are doing to build the backbone infrastructure so that we have what we call a Y shape, lines starting from the east, crossing into the west and all the way into the north to Kano. So you have a Y-shaped backbone infrastructure, which means that there's no part of the country which will be further than most, not all, than 400 kilometers from the major trunk line. And once you have done this, you have 8 billion scoop of gas in your network, for the next 5 to 6 years, you will have sufficient gas for you to meet your domestic need.
As the rest of the world moves away from fossil fuels and focuses on clean and renewable energy, this development has raised concerns for many Nigerians as the country's revenue heavily relied on crude oil. However, Kyari says Nigeria's case is different.
You hear a lot of stories around energy transition, clean fuel, and then, of course, lack of investment in the fossil fuel industry and so on and so forth. Our case is very different. The railway system still hasn't grown to the level where we can rely on oil for transportation of people, goods, and even petroleum. And of course, the road network, that's why we came in to intervene, to see how NNPC's tax credits can be utilized to bring that infrastructure.
The Visitor Media Trust is in a bid to establish a functional relationship and open clear lines of communication between the regulatory body and the media.
That report there set the tone for our discussion this morning, and I'm being joined right here in the studio by our Executive Director, CGID, and of course an energy analyst, Dr. Toby Oluwatola. Glad to have you on Business Daily.
Thank you for having me, as always.
You listened to the GCEO there. He talk about our situation being different at a point where the world is trying to move away from fossil fuel. We are discovering crude oil sector in commercial quantity, crude oil rather in commercial quantity.
That's not a bad thing. That's a great thing, because we need resources, we need finances to retool our industry, to retool our energy sector to the future of energy and move towards make that transition to the future of energy. And those resources right now mostly come from our trade in oil and gas. So it's not a bad thing that we're discovering new reserves.
What is the implication of this? You made mention of something. The bulk of our revenue comes from oil and gas. And the whole world is saying we're moving from oil and gas. We're moving to clean energy and, of course, renewable. What do you think will be the implication on this, or Nigeria, where we rely so much on this growth? The other sectors of the economy is in a way neglected.
You're absolutely right on that one, Yusuf. I think that it is very obvious that in another 7 to 17 years, a lot of the countries with which we trade, our oil and gas are going to be going carbon neutral. Absolutely. And many of them will not be buying as much anymore. But what we've also found, especially with the Ukraine war, is that energy security trumps everything. It trumps climate goals, it trumps everything. So ultimately, there is still an interregnum between now and when the carbon premium on various alternative energy sources gets eliminated and becomes negative. And it's not just on the energy sources, it's also on the processes of production, the process of production of steel, the processes of production of cement and plastic and ammonia, which are the four materials that the world consumes the most. Those processes are very carbon intensive, use a lot of oil and gas, fossil fuels. Once those processes get decarbonized a lot more, then we really have a problem. And obviously there's also transportation, how we get around and things like that. I think the bigger challenge though, especially with the PIA, is that, and this is a long awaited law that we have passed. But what we also ought to be asking ourselves is, are we implementing it effectively? In the piece that Chamun just did, she said, she talked about NNPC being the regulator. And the interesting thing is that right now there are two new regulators, so there is the upstream commission and there is the downstream regulatory authority, mid and downstream regulatory authority. So those now have the regulatory responsibilities. And then you have NNPC, an institution that has not done anything for itself in several decades, has about 7,000 staff, suddenly wanting to be, a $60 billion capitalization company, suddenly wanting to be the leading organization, private sector organization, in a sector that is on its way out. So I think that we are just throwing. If we continue down that path, we may just be throwing good money at
the wrong thing.
The wrong thing.
Absolutely. Let's look at this transition NNPC from the corporation to let's say commercialization of NNPC, as they call it. Now, looking at what has been done so far, the GCOD spoke about it yesterday. He did say that the company is currently owned, the shares of the company is owned in trust by the Ministry of Finance on behalf of Nigerian. So we did ask at what point is the company going to be public? Where the public can have access to, buy the shares of the company. He did say that probably next year. So we are hoping that by next year, the NNPCL will become a public limited.
I will not be buying those shares. I will not be buying those shares because you've got a company that has 7,000 employees doing almost nothing. Being very inefficient. I will not be buying those shares. They're not profitable shares. If the company is making profits, those profits are simply monopoly profits that could be more efficiently accrued by actual private sector companies.
There are reforms going on in that sector.
Taxes.
There are reforms going on in that sector.
I agree.
Don't you think that by the time, maybe between now and next year, there might really be a whole lot of changes in that sector that will make it more effective?
There's got to be, which is the point I'm making. There's got to be, and NNPC, as it's currently constituted, one of the things that the PIA says is that nobody can be worse off by the creation of the NNPC. But if you're going to have an effective organization, private sector organization, you've got to be efficient. You've got to be efficient. You've got to cut down the fat. And right now, NNPC, as it's constituted, does not deliver shareholder value. And that is evident by the fact that NNPC has barely remitted any money to the federal government coffers since the year started. So we have a sinking ship that we are throwing more resources at. That's simply what's happening.
That's a very, very hard statement there. We hope that NNPC will take a cue from that and see how they can actually respond themselves. Absolutely. But let's quickly look at Dangote Refinery. By next week, we hope that the refinery will be commissioned by the president. And of course, from then, probably our refining, instead of taking our crude outside for refining, Dangote Refinery can actually come in and then save that. How do you think this will impact positively in the Nigeria oil and gas sector?
I think
especially the oil sector.
I think that's a very positive thing for the sector, and I think perhaps one of the smarter moves that NNPC has made is acquiring 20% equity in that, and I think that's what NNPC ought to be doing a lot more of. Let private sector come build more refineries, let's release the monopoly hold. We keep every day, and we had Mr. Kerry say yesterday that every day they're having to deal with removal of illegal refineries. Why are those refineries illegal? Why don't we let more of those refineries go through the process of getting licenses and be legal refineries? Why do we insist on the government owning the refining business? So perhaps
there's no total deregulation of the sector, maybe.
Yeah, there is that. But Dangote could do it. We could make it possible for Dangote to build, the largest refinery in the country. Why is it that we can't have the same opportunities for modular refineries and for smaller companies who want to build modular refineries? I'm just saying that we've operated this sense of me, my friends, and I too much in our oil and gas sector, where historically the president, who's the Minister of Finance, has had the final say, the only say, on who imports petroleum products, who mines petroleum, who mines petroleum products. That's why the president wanted to have it for himself, and really have a Minister of State who's just a figurehead. So we've had a situation in this country where individuals have cornered the resources of the country for themselves and their friends. And that's the real thing that we have to break. And we have to make it really an open market that is competitive, where people can come and play. And NNPC in a more efficient form can then be some sort of a fund that really just invests in companies that we believe will do well, without giving those companies any preferential treatment.
Absolutely. That is a very big word there again. But quickly, before we go, I want us to touch on refineries.
Yes.
We have 3 refineries as it is. In Warri, in Kaduna, and of course Port Harcourt. Some of these refineries have been moribund for years, but yet we spend money on them, on what we call turnaround maintenance every year. We have workers in those places that take salaries every month. What is it not like a burden on government?
Absolutely, it is, and it's interesting. I was watching Mr. Kyari yesterday night, where he said we've made a business decision not to focus on the refineries, and then in this almost the same breath, in the same interview, he started talking about monies that were being invested in turnaround maintenance and pipelines to take crude to take products to the refineries, and I'm like, choose one. So I think that, you know, we've wasted too much resources on those refineries for too many years. Enough resources to have had built 20 more refineries. If you calculate all the salaries, all the benefits that people who work in those places doing nothing are getting, we could have built 20 more. So let's stop lying to ourselves. Let's sell those assets if anybody will buy them, and let's create value somewhere else. Let's get the private sector doing the business that the private sector does well, which is generate money and generate profits. Absolutely.
Dr. Toby Oluwatola, I must thank you for your time on Business Daily. There's no time for us. I wanted to touch on oil theft, but there's no time for us to go into
next
that
time.
On the show. Probably next time.
Next time.
We would like to have you here. Dr. Toby Oluwatola is the Executive Director of CGID and, of course, an energy analyst. He joined us on the Business Daily this morning. With that, it's a wrap on the show today. Join us tomorrow for more. I am Yusuf Akogu.